Onto the fixed income and money markets, the Naira depreciated 1 kobo week on week at interbank. We saw it closing at 165 Naira to the US dollar. However, it lost 1 Naira 20 kobo at the parallel market last week, closing at 172 Naira 50 kobo to the greenback. We're joining us to review the FX and fixed income markets is Leke Sule. He's a trader at Mansard Investment. Thank you so much for taking the time out to join us. Now we're still looking at let's highlights from last week. We saw the Naira closing 165 at the interbank, and then there's still that widening spread between the Naira, the interbank market, and the parallel market, which is still at 172. Are we going to see this go wider? What's going to happen?
Well, the spread we saw in the interbank market was because a lot of foreign investors actually came to sell. There's still some demand for FX in the interbank market, and this actually translates to the parallel market as well. The gap is still there. The parallel market actually went as high as 172 Naira to the dollar, whereas the interbank market was around 165. You notice that the interbank market Naira actually went as high as 165.65, but actually went back to around 164.65, then later closed at 165. I think another issue that has been helping the interbank market, Naira, the interbank market, is the forwards introduced by CBN. We expect Naira to remain very stable, maybe trading just within a 1 Naira band, because so
does that mean we wouldn't expect any additional sales outside of the orders this week?
Well,
but the Naira is comfortable, the CBN is comfortable, can comfortably support the Naira at this level. Exactly.
This is a more reasonable fraud for the CBN to defend. They find it easier to defend at this level. We've already seen a resistance at around 165. Once it goes above 165, it appears CBN comes in to sell forwards, not necessarily intervening directly, because since CBN introduced the interbank forward in the interbank market, we've actually not been seeing that sort of direct intervention. CBN actually calls, banks individually apply to CBN to purchase FX forwards. Then, of course, CBN sells to them, and they have to sell the same day. So we won't really see that direct intervention. So I expect Naira to remain very stable at this level.
But what about demand for this week, the trend?
Yeah, demand is ready to remain.
We expect demand, is it like tough demand that stifles the Naira, as it were?
Yes, Naira remains under pressure. Demand is expected to remain.
A constant.
Yeah, it's a constant. It's still there. And of course, we all know that the demand is likely being filled by the dial back of FPIs that came in during the, when the US Fed was aggressively buying US treasuries. And of course, we expect that to be a little bit muted, because we see some local demand from especially PFAs, and of course, yes, PFAs, pension fund administrators, and of course, the expectation at the last MPC meeting, a lot of dealers actually expected minimum that CBN was expected to increase share on public sector funds from 75 to 100%, but that didn't happen. A lot of people had gone short, so a lot of people got whipped. So we're still seeing some demand just to cover short positions, because we figure that a lot of dealers are still short. But as it goes towards 13.5 yield on the bond market, we expect foreign investors to sell, because at that level it doesn't become reasonable. And of course, remember that the 3-year benchmark, the 2015 bond, April 2015 bond, was taken off the benchmark during the week. A lot of people actually bought it with the expectation of selling, but it was taken off quite early. The yield went as low as 13.8, 13.9, which became very unattractive if you compare that to the 1-year treasury bill, which is currently yielding around 15%. So expect some demand to be on the T-bill market, which still remains very reasonable on the yield part. But for the bonds market, we expect shorts to keep covering the position, and once that is done, we expect a reversal. We expect to see yields back at 14% levels.
Well, what kind of interaction? Sorry to butt in, but are we going to set the primary versus the secondary market yields?
For treasury bills? For
treasury bills.
Yes, especially for the 91-day bill, we've actually noticed very little interaction, because most retail investors actually purchase the 91-day paper, but in the primary market. But in the secondary market, of course, the yield is always higher significantly, so it always makes more sense to buy the 91-day paper in the secondary market. For the 182-day, it's very it's always very close to the primary market. But for the 1 year, which is always in very high demand, we still expect to see a lot of demand on a 1 year. You figure what happened to the 182 day at the 182 day auction, the yield actually dipped a little bit. So that tells you that there's a little bit of demand for treasury bills. So we expect investors to actually rotate a little bit to the treasury bills market and move out from the bonds market in the short term, because we still believe bond yields are still going to go up.
Okay, well, but the mop-up activities of the CBN and open market operations, is that going to, what's been the trend, and what are we likely to see this week?
Well, last week CBN sold OMO treasury bills at a mid tenor, closed at 13.1 consistently. We've had like 5 or 6 OMO auctions close at that level. We expect more OMO. The market remains very liquid at above 660 billion. Okay. And we also have OMO maturities this week of about 141
so that's
billion.
Liquidity inflow,
exactly.
So that will keep rates.
Yes, overnight OBB rates at 10.25 and 10% respectively. So we expect CBN to keep selling OMO, and the private sector CRR increase. We don't expect to see more than a 300 to 400 withdrawal from the system. So the system is still going to remain largely liquid. Okay, well, so we expect CBN to sell OMO aggressively.